not having to have a job. All right. Right. So if I'm going to play an option, right, I have to think about which option I'm playing and like if I'm going to hold it overnight, like blah, blah, blah. If I'm going to go out the money, in the money, blah, blah, blah. And that's why, like, if you guys like learn this pattern, learn it on Forex. Forex, because you can get in and out without fees or without commission or without day trading rules or without anything. You can learn this pattern like as many times as you find it, right? Now with the S&P, with the options, you got the day trading pattern. You have Forex trades 24 hours a day. S&P 500 and options and all that stuff trades like 8 hours a day, right? So there's a big difference, right? But learn this pattern off of the Forex, right? So remember, we come up and the central banks have to do one thing. They have to fake the buyers out into thinking we're selling to get sellers, right? Right? That's just the retail trading part of this concept. But what's really happening is that the central banks are getting more longs because we went up really fast. We went up really fast. We went up really fast. And they didn't get enough orders in to finish the move up past this high right here, right? So they're going to shoot. They're going to collect more long orders. And they're going to continue to move up. While the move is actually happening up, they're buying shorts, right? At discounted prices or at premium prices, right? Because we're going short. So while this move is happening, every green candle you see, the central banks are buying a short, right? And the reason it marks up at this level is because they are trying to get it as high as they want, right? So this candle right here, they're buying majority of the shorts. You know how I can tell that? Because there's no wicks and there's nothing but body, right? So I know the central banks, I know at this point, we're about to get to a point where we're about to do, and I know this because this one has a wick. If we're looking at low time frame, this traded into something right here, order block right here, right? It came back down, traded, dropped some stuff off, blah, blah, blah. This is another area, and if we drop down to a low time frame, this will be 2 candles and more with structure, right? Because I'm looking at, I always start at the higher time frame and go down, right? All right, so we know we're up here, and I know the banks from this point on, like they bought a lot of longs orders just for them to drop it, right? Just for them to drop it. This is not enough for them to like sell these candles right here. They're not enough candles to sell this, right? All right, so they move up, out, right? They move up, they short it out, right? And then they consolidate a little bit more. They come down to here, they manipulate the price up even more so they can get that higher premium, and they sell it. Bam. Now I know that they need to come up to this block, to this block, and to this block. They get to drop those orders that manipulated the market back off at a equal or more value price, because like all this block and this block and this block, like as they made this move down, guess what? They are negative right now with this block, and this block, and they're negative. They're positive on this block, right? So I know that's why I draw out my order blocks, and on a low time frame, this will be an order block. We'll say the last green candle, right? Before the that this is an order block. This is order blocks are targeted just for one reason, for them to get that manipulation money that they went long or short on back to an area where they can get equal or profit off of that order, right? Supply and demand is for one simple reason. It is just to collect the stop losses and the limit orders at that higher or lower, right? So the supply zone, like I draw it all the way out, right? So I know it's going to come back to get this order block, right? But I know, and it only has to do 50%, right? So we draw the whole thing out, supply all the way to the high, right? It only has to get 50% of this. It only has to have like, not even 50%. It needs enough time to download whatever it's downloading and snatch up whatever it's snatching, right? But like in this case with this order block, it might come up here and try to like snatch these highs, which will void out this order block, which means we're probably going higher, right? But we will come back to this as an order block, right? Or it's going to respect it and just come in here, collect the order block, and shoot back down, right? It's always going to be an up move, followed by a down move, by up move, by a down move, by up move, right? So here's what I'll explain to you, right? So this is a break and market structure because this would have been a body that engulfed this low, right? This is a stop hunt, right? Which is trying to fake out the market, right? And I'm going to show you examples, right? This is a return to order block just to get those that order block that manipulated this move up to drop them back off, right? All right, and it's going to shoot down, right? Because that's what structure is, right? So let's look at some of these on the charts. Any questions so far? I know there's a million of them. If it has to do with the stop hunt, I'll entertain it. If it has to do with the break and market structure or the strategy, I will entertain it. If it has to do with anything else, I have referenced you to the videos under. Okay? Any questions? Am I even on?
Yeah, you're.
Oh,
yeah,
shit.
you're on. It
You're
makes
on,
sense.
Damn.
We went over it. It's kind of starting to drill into my head.
It doesn't matter how many times I teach it to you. It doesn't matter how much you read. You have to get chart time. It's like asking a swole mofo, like, how do you get swole, right? And he tells you, right? That's me telling you this strategy. But until you go to the gym, you ain't getting swole. Until you apply this to charts, you ain't learning it, bud.
When you read
it
that
syncs
PDF
better if I could read it over and over and then apply it.
Oh, yeah.
When you
And have
when
an
you
example
read
right
that PDF and you see the examples, you're going to be able to take it to the chart, and it's going to make complete sense.
Yeah, see, because trying to do that with the videos is like cancer.
Hey, that's why you draw it out. Remember in my earlier videos, I said draw this pattern out, find it on the, explain to yourself what happens, then draw it on the charts, then reference my video with any confusion and questions, right?
Yeah.
Like, you're not going to learn this stuff overnight. This stuff has been studied by people who spent 20 and 30 years in the stock market as institutional traders or as like regular traders who just studied. All right, dudes, what questions do we have before we go into 1 minute?
Mickey,
All right,
I got a
you're up.
question. Do I
What's
need
up,
to
Paul?
know the difference between supply and demand and the order blocks? As long as I can see it on the chart, does it matter what I call it?
It does. Because they have two different. Actually, you know what? Hey, just play the highs and lows like in the return to order. As long as you have a break and market structure and a supply or order block, it's going to return. I don't expect you to.
I can see your gaps. I can see all kinds of shit. I just don't know what to call it. And I don't really care.
Yeah, you're going to see. Well, order blocks and supply and demand are two separate concepts with two separate purposes. All right.
And I understand that the supply and demand is what I've been calling out, and then the order blocks are like two or more of the market structures where it's like a pull, it's like a retracement is what I'm looking at. It's a retracement, a pullback, and then a go. I can see it in my head.
It's either a retracement or a reversal, right? So the retracement is, So the order block on a reversal is just, so if we're in bullish, the last green candle that origin the big move down, right? Or if we're not reversing, it's just the retracement and then continue on with the manipulation move up. Exactly. Manipulation. All right. Does that make sense? Supply and demand.
Because as long as it's not engulfing, right? As long as it's not engulfing, if it's engulfing that body, then I know there's something going on there. I see that. And then like with their retracements and like you see their retracements and the candles without wicks where they're just manipulating the whole system. I can see all of that. I see it. So
perfect.
I don't think it matters what I call it, but I can see
it. I don't care what you call it. Just understand the concept.
Right. Okay.
Is it easier for us to see it on the Forex or just?
It's easier to see on the Forex or on SPX 500 USD or NASDAQ 100 and any currency. You can see that
I've been applying this to crypto and it's been helping.
Yeah, you can apply this to crypto. It's really easy on crypto because crypto is not manipulated. Like, it doesn't have that many variables yet. I keep saying manipulated, but variables. All right, so check this out. The most important part of any price action is the break and market, identifying the break and market structure. You can identify the gaps all day long, but until you identify the break and market structure, like at a 1 minute level, you're not going to find the entries and the exits you're looking for. As if you can't find it on the hourly, the 30-minute, the 15-minute, the daily, you're not going to identify any trend changes, and you're going to be on the wrong side of the market with your trades, with the retail traders looking like a lamb eating grass and all stupid, and then the lion's going to come up and eat you alive. All right? So remember that. Don't go to the water hole when you're trading, is what I tell people. Right? So remember, that's why I'm so like dominant on like you guys learning highs, lows, high lows, swing highs, swing lows, break a structure versus break a market structure, right? Break a structure. Now, as we're going up, I'm paying attention to these lows as they're established. So as it's coming down, I'm watching like lows on every time frame. Like, but honestly, if I'm trading live, I'm usually on the 1 to 3 minute time frame because it's all fractal, right? So I know if this is a swing, I know if it gets lower than this, we are in a bearish market, right? So the moment this went below here, I know we're in a bearish market. It's just confluence, right? All right, so let me
with a body, right?
With the body. Now, what I'm about to teach you, the stop hunt, which I already taught, but I know that's very confusing, is definitely with the wick, right?
Multiple things happen in a certain area. Is that what confluence is?
It's just confirmation, bud.
Well, multiple things happen in a certain area?
Yeah. That works.
Cool.
All right, so check this out. So this is a perfect example of a stop hunt. And usually, like you want to see if you're going to play a turtle soup or this play, if you want to see the reversal, you want the wick to be wick. Actually, I don't know why I said usually. All the freaking time, like you establish a high, right? On every high, I draw a line, or this does it for me, right? I draw a line, right? And if it's wick through and retrace it and shows an effort to want to go down, like there's a lot that happens, right? So this is on the 4 hour. If we're like coming back up into here and we wick it down on that day, I'm jumping down to the 5 minute and below. And this is gonna be hard to do with no mouse. Okay, so nope, this is not the high yet. This is the high, which is not marked off. Maybe it's not the high. Jesus, I hate doing this shit. All right, that was the high. All right, so check this out. This, it doesn't show it right here, but on the left was that one candle that had established the dominant high. These highs don't matter. I'm on the 1 minute, but like, look, on the daily chart, I was in the wrong damn direction. Let me reset my chart. It's so much easier when you have, all right, so you see this swing on the daily chart?
Mm-hmm.
All right, let me jump down to 4 so it's more clearer. All right, there we go. All right, so we came up, we dropped down, and then when we came up to test this, it just wicked it, and it started heading down. Because it wicked it, I knew at that point, that's my clue that we're going to freaking do a reversal, right? When the body incorporated this low, not this one, because this is a lit wick, right? This low, well, I mean, you can do this one, but it's going to be the difference between you getting in the trade right here or right here if you're doing a total soup, which you guys won't be at that level for a while. All right, but once the body comes in here, that's confirmation because we have this swing high, low, high, right? And the reason this doesn't really, I don't play that is, well, it's a wick with no body, right? That is obviously just taking out the break of market structure in this candle, which on a lower time frame would be more than one candle, right? So I would have identified that, but this one's not taking out anything because I got nothing but solid green manipulation bar, right? So at this moment, I know, bam, I can either jump in the trade and ride the train down, which I would do on maybe the 2 hour and above if I find this. On the 1 hour and below, I'm going to wait. I'm going to sit there on my hands. I'm not going to get in an order. And I'm going to wait for it to come back to this order block or this supply zone. Then I'm going to really pay attention. I'm going to jump to the 1 minute. And oh, wow, what a freaking perfect example, right? So I'm on the 1 minute, I'm going to wait for it to break market structure right here, right? Because this is the dominant low right here. dominant low, but this is the next dominant low that tells me we're going to continue going down, right? When this candle changes, like, and I'm in stock or supply zone, like I know I'm good to go. Like, bam, it's shooting down, and I'm gonna place my order, right? So remember, this trade gives you 2 chances, and it always happens like this. Stock Advocate, how am I doing?
Love it, man.
All right, bro.
They're gonna, once they see it, it's all the dots are gonna connect. And everyone's gonna just understand it.
Yep.
It's exactly what happened to me.
Remember, I said break a structure is this candle engulfed it, right? This is the manipulation phase where they're trying to build more, they're placing more long orders, then they go up higher so they can buy shorts on the way up, right? Sharp movement down. When if this high is taken out by a wick, which this would be a wick, right? This would be a wick. Everything below this high needs to be a wick. All right, I can't stress that enough. I know we're going down, and then when we break market structure down, like I know, bam, look for supply zone, look for order block, market, and you make the judgment call if you want to try to ride this down and then play it back up and then ride it back down. Because this move right here, most of the time is like the money maker, right? This move is always a money maker, but people, inexperienced traders, always do this. They don't pay attention to that wick concept, and they don't get on the lower time frames to get the confirmation bias. Are we bearish? So look, are we bullish? Bullish, bearish, because guess what? The daily is bearish because the weekly has to retrace and do manipulation time, right? And I just do that all the way down. When I find my entries and exits, it's from the 1 minute to 5 minute, doing the same fucking thing, right? I want to see this. Even when it returns to the order block, let's say this, I picked this up off the 30 minute or the 1 hour, right? This pattern, right? And I got a supply zone right here, or demands or order block right here off of the hour chart, right? This came off of the hour and it's happening live right here, right? To get in an order, I will always jump in the 1 minute chart and I will wait for the same pattern. And that's how you get the most precise entries you can find. I made $15 today in 30 minutes because of that technique right here.
Mick, I don't know.
Okay,
I don't know.
What's up?
I don't know if you explained to the group at all, like the fair value gaps, to help like let them know like it will go back up to that supply zone 2 to grab those fair value gaps.
Yeah, he has.
Yo,
Okay.
no, but, there's more detail that I can teach you guys because I know I went over it, but like, check this out. If I don't get this pattern, right, it could be months and years and days later before this gap is even thought of, right? If I get this pattern, I know the next is going to move down to a supply zone or order block and then move back up to that RTO, return to order block, right? And it's going to move down to the next RTO that was established on that RTO, right? But let's say it's something like in a consolidation zone, like let's pretend like this wick didn't wick it out. That's a bad example. Let's pretend like this that's got an order block. Okay, this is perfect, right? So this is a bullish market up, right? And you know how I said the order blocks on move up, right? Right here, it has a fair value gap right here. It'll be taken out or it won't, right? They're not worried about coming back and downloading these as much as they are off of the highs and the lows, the order blocks on the highs and the lows. Those are the ones that move the market, right? So if this shoots up all the way up here and it comes back down to this gap, establishes a demand zone, establishes a supply or a demand or order block here, I know it's going to shoot up here, and then I know based off of right here, it's going to like come back to that, and it's going to continue the trend up because we're in a bullish trend right now. And it's going to ignore these, and you can see this all in Tesla, S&P 500. Look back since March. Like it does not give a shit. It has time that it's going to come back and get those, but it doesn't have to happen right now, right? But the ones at the highs and the lows, those are going to be the next moves. Like those are guaranteed the next moves, right? Now with that being said, you have to be smart about this because, like, if I'm on a daily chart, right, it could take weeks and months, right, for stuff to happen, right? But I see that when a downtrend, pick up, oh, I found it, right? I'm gonna try to pick up what it's gonna like establish off of, right, to move back up, right? And it did right here. And remember, I'm on a daily, so if I refine this, like my entry for this will probably be, if I refine this all the way to the minute, it will probably be, I wish freaking computer would work like it's supposed to. It'll be half of this, right? Like, so it'll probably be in this level, right? The green box, the demand zone, and the order block will probably be around here, right? All right. And then it takes it and it shoot back up to this last green candle. And if I refine this candle to the low time frames, guess what? It's going to be right around here that it enters in, right? And then we're either going to continue the bullish trend up in that manner because it always bounces back and forth. Stock Advocate, please tell them that, like, let's go to the 1 minute. It'll be so much easier. Stock Advocate, what do you think about this? Like, am I lying or am I telling the truth?
You're telling the truth, man. You can even confirm it too, even with the fib, if people are like doubting it too, between the high and the low, where order blocks are.
Exactly, man. So let's check this out. So we're either reversing right here on the 1 minute, which this don't have a candle that closed it, so we're not reversing yet. Like, if it's a wick that just comes down here, that's fine. Like, I don't care. They're just shorting the retail traders off of this right here until a body closes below this low. I don't have confirmation, right? I wait for confirmation. I wait. Patience is a virtue. While we wait to see what this does, let's talk about some things. All right. So I told you can find this stuff on Forex, right? But what you can really do, if you really want to apply this to options, what I do, I use the SPX 500 USD, which I've only found on TradingView, and the NASDAQ 100 USD. You can find it on TradingView or any place that supports Forex, right? Thinkorswim, Robinhood, they don't support Forex that well, so there, right? You don't want the S&P 500. You don't want the SPY or the ES. You want the currency. So if it doesn't say USD behind it, it's the wrong way to go, right? Same thing with the NASDAQ, right? So let's say, like, let's take today, right? I played Apple off of this. Let's go back to Apple. All right, let's block off the time. So 9:30 was right here. All right. So at this point, right, I don't even look at Apple charts. I don't care. I don't need to, right? This is what controls where Apple goes. Everybody thinks that Apple controls where the S&P 500 goes. No, son, you're not that special, right? This chart right here, this currency controls it, right? So I'm just watching this, right? Watching it. The stop hunt, right? The stop hunt right here. Right here at, I marked off the wrong time. Oh, I'm on the 1 hour chart. All right, let me slow down.
Another thing that helps too on TradingView, grab like 5 pairs, and this is what's helped me. Grab like 5 pairs before you go to bed. Look at those charts. Write a shit ton of notes on the chart, where you're at, where you think it's going to go, what you think's happening. Go to bed, and when you come back the next day, look and see what happened, and then study that.
And then at that point, erase. You always erase your charts as a beginner trader.
Yep, and then repeat.
And repeat. And like I said, chart time is the only thing that's going to teach you this stuff, guys. Chart time. Look at this. Okay, I want you to look at where this pip, like where this wick goes exactly. It goes exactly to this order block low. Right there. And a little, like right there. Do a pip, right? This stuff's controlled, guys. If you don't realize it, like, you're a fool. Like, but anyway, hey, let's open it up for questions. Let's go back to the 1 minute, see what happened, see if we can identify some stuff. So yeah, we're in consolidation. It's Asian range. That's something that I will teach you guys. Once you can prove to me that you got this pattern down, I will teach you how this simple trick, and I'll go over it real quick with you, but it's going to blow your mind, right? I'll teach you how to trade London into Asian in the US New York time market, because Asian is usually 90% of the time the consolidation phase. London is the manipulation phase. Up until